Okay, well, welcome to New Finance. We're going to do two very short panel sessions. So can I ask Brett, Francine and Michael to take their seats here? Mark, would you like to just moderate this?
They're thinking about how good your presentation was. Analytics has been around for decades. Big data suddenly arrived. You know, barriers to industry are breaking down. What's the big deal? Who wants to go?
Very short. So it's totally right that analytics have been around for decades. The profession of data mining is an old and venerable one. It's certainly in my industry where 20 years old is old. The difference now and the reason for the excitement is that enormous amounts more data are being produced by devices, by systems, so there's a lot more raw material to work with. And the cheapness of running distributed technologies on cloud servers means that it is now financially feasible to analyze that data, whereas before it was enormously expensive. So the crossover of supply of data, ability to use it, has led to this boom.
I think Michael's going to have some of the most interesting points on this, so I'll save him for last. But I'd like to echo some of his points, and that is, it's not just a matter of determining what you can do with technology. Wow, I've got a great new widget. I can do daily valuations for an insurance company. It's finding out where it can offer actual value to the insurance company, because insurance companies don't need daily valuations. And as much as they maybe can't do them, and you can make it possible for them, they don't care. So you have to make something real. So I'd very much focus, I think, as we're going to do in some of the workshops, on what needs to improve in the value chain for insurers right now. They want to get better at pricing, at customer retention, better at claims, making sure they tie into their reinsurance recoveries, reducing fraud. So what can big data do in those areas? So don't look at it from a lens of what can you accomplish. Look at it from a lens of what does an insurer need and how can you bring that to them.
So I guess my answer would be that the big data it's part of the overall picture, but it's not the end in itself. It gives us the tools to combine with digital, the customer experience, with automation, to fundamentally change the way that we deal with our customers. And it's that link, I think, that's the important thing. It's the joining of the three themes that will really change things.
I think at the end of last year, we saw another large insurer who, for 10 years, have been trying to bring several databases together to get a single view of the customer. Worked, I think, with MongoDB and did it in 90 days. But there is, as well as there's a lot of opportunity, there seems to be risk attached to big data, and it seems to come around to consent. Can we actually use some of that data? How do you overcome some of those problems? If the data's yours, that's fine. But when it isn't, and you see an opportunity, how do you work around that?
So I think, this is the point I raised earlier in the introduction. It's a serious issue that, as an industry, we need to think carefully about. I think part of the problem is people don't realise what they've got out there, and they don't realise the consent that they're accidentally giving in a lot of cases. And even though it might be legal, it might be within the regulation, the backlash is just not worth your industry's or our industry's reputation, the brand's reputation. So it's about being really clear, I think, with customers what it is that you're going to actually do with this information, what you're going to use, how you're going to use it. And there's a real balance to be struck, because we're all in an arms race for pricing, for risk selection, for underwriting, for everything else within insurance. It's the way it works. But we need to balance that against fairness and ethics, and it's a serious issue.
Yeah, I agree. And you say, Mark, there's a lot of risk, and I think that's the case, and I think that will play on insurers' minds, because as much as things may be legal or agreed in a contract they've signed, customers have certain expectations of what you're going to do and how you're going to gather information about them. And as you gather data from new sources, it's unclear how customers will react. It could easily be that you know more about them, and so therefore you send your renewal premium notices sooner to them, to certain customers, and later to other customers. That won't necessarily be transparent to them, and you may not get any pushback. But then you may take other actions that make people question, how did you get that information, and how much information do you have about me, and that may make them nervous and give you a Daily Mail headline. And I don't think there's an easy answer right now. And insurance isn't famous for paving the way with new technology. So I think it may be a bit of a slow process.
Yeah, I think I just absolutely echo that, and I'm not an insurance industry professional, but I see exactly the same questions and problems across industry, which is that the law is far weaker than what ethics or propriety would suggest that you should do with people's data. So there's an enormous grey area where there are some very difficult choices about what to take advantage of.
So very quickly, last question. So firstly, it's actually two questions. Firstly, do you think then the opportunity is for smaller, more agile companies and entrepreneurs and innovators because they can arguably take more risk? But on the back of that, do you think that then for entrepreneurs and innovators, the opportunity is within, say, distribution rather than the manufacture of insurance products? That's quite hard for you to answer, but Michael, it might be good for you.
I've got a personal view. I think the partnership is actually where these things are at. I mean, you need the scale, you need the size, you need the millions of customers that big insurers have got access to. Big insurers need the agility, the nimbleness, the new ideas. So I think the partnership is the strength for me.
You're asking whether you thought the opportunity is more in production than distribution. I don't think there is a limit to where the opportunity is. I think it will be a slow process, but there's any number of ways to improve data, from gathering more about a customer to help you check for fraud better, to knowing more about them, to knowing how to price, when to send renewal notices, what they'll be interested in. So I think there's any number of areas, but the focus has to be not on what I as a technologist know how to do, but what my customer as an insurance business person needs me to do for them and can understand and is willing to take the risk for. Anything like that could succeed.
I think that's it. So you're agile anyway. I think that's it. Thank you very much. Any questions for any of the... There is one. Right.
Sorry, Simon Dean Johns from Keystone Law. I mean, I've been involved in disruptive financial services, well, at least since '99. I've done a couple of startups in peer-to-peer and so on, and advised a lot of others. And I think the big challenge here is we're starting with a whole lot of assumptions that are being swept under the carpet. Not intentionally, but it's just what happens in established industries, I think. And the big assumption, I think, seems to be that A, we know what insurance is. B, customers somehow want that. And who are those customers? That customers, there's no focus on what the activities those customers are engaged in and where insurance will be supportive or not. You've got to look at steps people are taking to disintermediate insurance altogether. On the big data side, I would say, there's a great assumption that big data is somehow predictive, and it's not. It's just probabilistic. And big data is just probabilistic. It doesn't give you. We can't predict human behaviour. It's non-normal data.
I don't think that's all big data is it? I think it's more than
No. But all I'm saying is there's a whole bunch of assumptions that we're making and that aren't necessarily spelt out. And I think we need to spell them out if you're really going to look at the whole value chain and where the disruption is likely to strike, has struck, and you don't realise. And you know where the best priorities are, if you like, for disruption.
So I think you're correct. The fundamental reality, technology is going to advance, whether we like it or not. It's not going to stop. There's far too many people working on it for us to stop that, right? Outside here, all around the world. And what is actually happening today with big data is quite a simple thing. What is data? If you actually look at data, data is basically memory. That's what it is. It's your memory, or your ability to think, or your ability to have intelligence. And your ability of your intelligence is your ability to ask questions, which is actually the measure of intelligence. So where in the past we looked at technology as something where we would be asking the questions to the technology and using that technology to crunch numbers to provide us with the answers, that is going to shift. And that's the sea change that's taking place. The sea change that's taking place here is the amount of data that's going to be available for people to query about history, to provide probability around certainty. The systems are going to be far more powerful than the human beings. So therefore, the systems will be providing you with options. You'll not be querying them, asking them, I would like this, or what's my best option? They will be presenting those options to you. What is the best thing for you to do? What's the best assets for you to liquidate? In the future, the systems will give you that advice. It will come to you as a personal advisor on whatever area of interest that you have. It's a complete sea change from where we are today. We're not going to stop that. That's going to happen, whether we like it or not. And also, the information that was once held within insurance companies, that we locked up in your vaults, that you kept, that was yours, that only your actuaries could see, is over, because it's freely available to everybody. And in fact, the data available to everybody is much greater than that. So it's how do you get there to that position where you're in the front step? And all this stuff about regulation and risk around that, the technology guys will figure it out. Now, there will always be risk around selling policies, but the reality is there's a massive sea change in what's taking place. These systems in the very short term will be far more intelligent than us. And they'll be asking the questions, not us. That's the reality.
Does anyone disagree with that or have a comment to make?
Yeah. So, well, my question is really for Michael, which is, I agree almost with everything you said. All the technologists get it, the digital guys get it, the customer-focused guys get it. The issue is that I would characterise the insurance industry as the least progressive out of all financial services sectors. How do you bridge that gap with the sleepy paper-based organisation that the AXA, etc., are going to be fundamentally based on? That's the biggest issue I see.
Well, maybe they won't survive. You know, big companies die all the time. If you look at history, they die all the time. So maybe somebody new will come up.
Maybe Michael wants to comment on that.
Maybe they'll wake up and they'll look at opportunities.
But that's the biggest problem.
That's the reality. The reality is we can't stop this thing.
I agree. It's just whether or not any of them can catch up.
So I think that's interesting as well, because we're talking about data, big data, but also some of these things like IBM Watson and Google D-Wave. This computational power that's able to do this analysis and artificial intelligence. Perhaps that should be part of the discussion as well. Anyone here have any comments to make? I mean, it sounds like Skynet, really, doesn't it? But any comments, Michael?
I think there's a transition coming, certainly. I don't think big insurers are going to go away, because you need the financial strength to back the risks and the assets that exist. So startups are always going to struggle. Somebody's got to reinsure that risk somewhere, and you need strength and solidity for that. The fact that we're here, some of our competitors are here, and we're thinking about these changes from within means that, yes, we're slow, yeah, but it's starting. And I don't think that the transformation will happen overnight to self-learning systems and, insurers going out of business or anything daft like that. I think that over time, you'll see products and services added to the kind of risk models that we have at the moment, and the nature of the proposition will change fundamentally. And it is a slow burn, but at the end of the day, we still need to secure those assets, and that's our fundamental purpose.
Any more questions? Any more comments? Oh, one more.
Hi, Dave Webb. Been in the insurance industry for a while. I think there is a question here that we always get sucked into, which is about the customer. In the insurance industry, and the reason we've been slow, I would probably qualify that degree in terms of pricing. Say in motor insurance, I would argue the insurance industry is using big data for decades. There are millions and millions of data points used to price a single motor insurance risk that has been used on mainframes going back forever. So let's not be too critical insurers. The problem comes when thinking about what we do now is that it's internal. what can big data do for us to mean that we can improve profitability? What we don't seem to do, and I'll pick up the point that was made by Simon here, is think from the customer. What actually value is the customer getting from that means that customer wants to stay with their current provider of insurance, rather than actually what can we use it to push to them in terms of the typical argument goes down cross-sell to them. Well, if the customer doesn't want it, well, he's not going to buy it. So let's not forget that crucial part of this in terms of how we use the data. I think it's a really great point you make around the openness of data and some of the competitive advantage that large insurers currently has is about that ownership of data to price risks. In the new world coming, that monopoly on data is disappearing, and there's a really interesting question about how insurance companies respond.
And I think the point here is that actually the certainty around risk should actually diminish as well, because the amount of data you have is greater. Therefore, your understanding of risk will improve.
Well, I think
these things go hand in hand.
There's a more interesting part going on there in terms of the shift in the basis of pricing is going from being demographic information to being behavioural information, and that makes a massive change in the way in which we think about the industry. And there's some really interesting commoditisation cycles that could happen in that space.
Can I just talk a little bit about that point? I think it's a great point about cross-selling. So I think that's really important. So if you look at a customer, I have lots of insurance, I have lots of products, I have lots of property personally, so I have lots of insurance. I find it extremely complex to manage my own personal life around insurance. I don't know what value my insurance is. I just know I need it. And I know that every time I get a quote, I can always get a cheaper quote somewhere else. Actually, I don't want to do any of that. I don't want to go looking for and GoCompare.com and be an aggregator. That was a technology that allowed us to get to the next stage. Right? What I want is I want my insurance company to provide me a service that I know my insurance company is the best place for me to be. I don't want to have to go to an aggregator to get that.
Can I just clarify? Are you then willing to share your personal data with that insurer?
Well, how much personal data do I need to share?
Anything, everything?
For sure, we're going to have to do that anyway. We're already doing it.
So are you personally, so I'm allowed to track your telematics, your car movements, your phone movements, those sort of things?
Well, I don't know if I need to share you that. What I need to share I need to share enough of my information to allow you to understand my needs from you as my insurer to insure me. That's what I need to share with you.
But who decides what is actually hard?
The individual.
Well, not necessarily, because the amount of data that you need may be something that's completely abstract to you, but you could use that as a sort of rating factor.
Yeah.
Because the phone where you actually go, if your phone is in the gym every day as opposed to down other, there may be certain things like that.
Isn't that a question of choice though? If you give the consumer the choice, and as a result of that, you might get a better premium. You might do it.
There's a restriction in that as well.
Okay, sorry. All right. Last question.
Very last point.
Yes, you're speaking about consumer choice. The real issue for the consumer isn't so much how many different providers there are and at what prices. It is actually being able to find a provider, any provider, who is going to pay out when something goes wrong. Every year, the small print on the insurance policies gets longer, more convoluted, and has more exclusions. I know it because I have to buy travel insurance, and over the years it has just gotten harder. If you want to make it easy for your customers, give them the confidence, the trust that you will actually help them out when something goes wrong, and they will be willing to pay a premium for it.
I think that's a great start to this. Lots of opportunity, clearly.
Thank you very much, guys. We're going to bring our other three experts now. We're just going to ask another question.